Guys, what is up? It is episode number 250. Quite the milestone, you might say. 250 weeks ago, this week, I guess, I started this podcast as the world was in the middle of the COVID pandemic lockdowns. And I had planned to make this podcast today all about the stuff that I have learned over the past 5 years. But a certain individual that is located in the US announced that he was going to introduce tariffs, and that has hijacked all the global news headlines. And so we're going to talk about that instead. And so on Wednesday of this past week, it is now Saturday as I'm recording this. On Wednesday, the 2nd of April, Donald Trump announced that he was imposing tariffs on every single country in the world, including 2 islands that are inhabited exclusively by penguins. So I guess we're going to have a talk about this tariff situation and their impact on the world economy and also the various different asset classes that exist and indeed the different markets around the world in which those assets are traded. The stock market certainly did not delay in showing how it felt about the tariffs. And there was an immediate, fall off a cliff. And it's interesting to me, if I go back to episode, I think maybe 4 or 5, something like that, of this podcast, I can remember we were in the middle of the COVID pandemic and the stock market had done something very, very similar. It had dropped massively. And of course, the reason I know that is because in the past week, they are all saying that this is the largest drop since the COVID pandemic. And so anyway, very similar times that we are in. And it does make me wonder what the future holds in this situation. Given looking back now, we can kind of say, okay, well, we went through COVID. We saw the disruption that it had on our markets and all that. And I wonder if we're in a similar situation. What I said back then, and I don't know whether it's still the case now, but usually the property market lags the stock market by 6 to 12 months. And so we'll have to wait and see how things pan out because, if you go back to episode 1 or 5 or whatever it was, the first couple of weeks of starting the podcast, sure enough, we did have this temporary impact on the property market. And as we know, a lot of people panicked. Quite a few people decided to pull out of buying. A few people put their properties on the market. And then suddenly people's decisions around property changed quite dramatically. And all of a sudden people were buying property miles from where they were currently living. A lot of people gave up rental property that they were living in and moved back home with their parents. And as we know, the governments reduced, like the ECB and the Bank of England and the US Fed, they all dropped interest rates massively. And those interest rate drops, and then also the governments around the world started to pump billions into trying to keep the economies afloat. And so, there was a lot of people that were locked down. Quite a few people had been furloughed, made unemployed and stuff like that. But if you have a look at the whole thing, what it actually did was everyone was sitting at home, unable to go out and spend money. If you were, pumping money into the economy and you had a way of spending it, like going to restaurants, going on holidays, buying things, then that's fine. But when a lot of people were locked down, they just didn't do any spending of any sort. And so savings grew. And so a lot of people, because they were living at home with their parents instead of renting in the city where they're going to university or going to work, whatever it is, they were suddenly able to save quite a substantial amount. And so later, when COVID, when the lockdowns were relaxed and all that, there was this massive flood of spending, this catch up. And a lot of people were spending, a lot of building projects were certainly restarted. And suddenly there was a shortage of labor, there was a shortage of capacity, there was a shortage of everything except money. And sure enough, what did that do? It pushed up inflation. Triggering, of course, as we all know now, increased interest rates And then this had the opposite effect on the property market, and the property market started to drop. So post-COVID, the prices go down. Then they bounce back up because of low interest rates and the spending that people had, the ability to spend. And then it came back down when inflation peaked its ugly head. But Gavin, Irish property prices are still going up, and they never really went down. Yes, that's true. But in the case of the Irish market, we have such an acute imbalance between supply and demand. That is what kept the market buoyant. And in fact, had interest rates remained as low as they were, remember they went down to negative at one stage. If you kept your money in the bank, you were actually being charged by the bank for it. That's a negative interest rate. If that had continued to be the case, you can be sure that the market today would be much higher than it currently is. And so it is interesting just kind of looking back and watching all that. So now that these tariffs have been announced, well, it's what's going to happen. We really have to think about this. It's important to start with, I don't have a crystal ball here. This is just me speculating on what could happen. And obviously, it's my belief, and I would, put my money where my beliefs and my hypothesis is. And so, leaving that aside, I think this is going to be bad for the economy. I do think. Now, I should start also by declaring my bias against Donald Trump. Maybe the best way to do this is to actually explain the evolution of my opinion of the man, because it has changed an awful lot in the last 40 years, I'd say. In 1987, so we're 38 years ago, 1987, I think it is, when I was about 15 years of age, the book The Art of the Deal was published by Donald Trump. And as a young, impressionable teenager, I thought this was an amazing read. And I kind of came out of reading that book saying, whoa, I want to be rich. I want to be wealthy. I want to have this luxurious lifestyle. And of course, he was the guy that was very brash about it. Like, he was on the front cover of, I think it was Time magazine or something, and he was holding this ace card in his hand. I can remember the image still clearly today, and it was Trump, holding up this ace card. And all very, very impressionable for a young man. So I was definitely a fan, not just a fan, I was a very big fan of Donald Trump as a teenager. And so much so that when I was in school, we were asked by our teachers to write an essay on our heroes. And whilst all of my classmates went off and found inspiration in people like Nelson Mandela and Mother Teresa, or indeed their parents, their moms and their dads and stuff, I decided that Donald Trump was my hero. And I cringe today in admitting that to you, but this is the truth. And so, to say that I'm cringing right now, having admitted that, is a major understatement. The fanboy attitude that I had towards Donald Trump, it lasted about 6 or 7 years until I was in my early 20s. And I was so interested in Donald Trump that I would pick up any biography that was out there on the man. And when I was on a holiday in the US, I went into a bookstore and I saw The Trumps. It was a book about not just Donald Trump, but about the family, the Trump family. So I picked that up, bought it, and started reading it. And it was a very highly researched and very fact-based book. And it went right back. It was talking about the grandparents of Donald Trump and the parents and the man. And what's fascinating about it is that both of Donald Trump's father's parents were German, and both of his mother's parents were Scottish. So ironically, all migrants, all immigrants to America. And you would imagine with his attitude today, that the man must have been born and bred in America for generations. But no, in fact, both his grandparents, all four grandparents, were migrants. Now, to cut a long story short, the book did not paint a very flattering picture of Donald Trump. This was the first time I read a book about Donald Trump that was not guided and written essentially by the man himself. And that was a real eye-opener for me. When you actually strip away the public relations exercise, you suddenly see all of the stuff about the bankruptcies and about his attitude to people and his, the way he kind of conducts himself and the narcissism. And it changed how I felt about the man. Now, it didn't completely make me into a sort of very negative. It just meant that I was now not so certain. I was no longer the fanboy. I was kind of, we'll say, neutral on the man. So fast forward to my 30s and the show The Apprentice came out. And I saw the show and I can remember between the show and all of this kind of ridiculous branding where there was Trump steaks, and there was Trump vodka, and there was the Trump University. It really started to kind of dawn on me that this is not a serious businessman. This is kind of like more of a sort of tacky celebrity who is famous simply for being famous. A little bit like, we'll say, the Kardashians or something like that. They're not famous for anything in particular, just for being famous. And so I've got to disclose, like, that's the evolution. Like, I just went from being a fanboy to being neutral to actually finding him kind of distasteful. And then when he got into the politics and stuff like that, I became quite negative on Donald Trump. So disclosure is made. Far from being a fan today, I find him quite repulsive, to be quite honest. So I definitely have some bias here against the man. It's important to be aware of your own biases. And so anyway, leaving that aside, let's get back to the central topic of the tariffs and their impact on both the economy and the property market and things like that. So what I want to do right now is I want to focus on the Irish and UK economies, and I'm going to look at both the negative and the positive. Now, is there any positive? We shall get into that, but starting with the negatives and looking at the Irish market to begin with, this is definitely not good. There are, like, being part of the EU, we have been hit with the full 20% tariff that he has introduced for the entire EU. Now, important to remember that being an island, we are a heavily export-driven economy. Like, virtually everything is exported, if you think about it. Like, we have such a small population of just 5.2 million that we are going to always produce and sell a lot more than we actually consume at home. Our products are now going to be 20% less competitive than they were, yesterday. And so certainly selling into the US market, which would be the biggest market that we sell into, this is definitely going to reduce sales volumes, I would have thought. And it's just going to mean the big companies that are doing all of those sales are going to be making lower profits. And so the exchequer will be collecting less tax. The next thing to think about then is the employment side of things. Now, with falling profitability, companies are always in this situation where, shareholders get used to a certain level of profitability. And as soon as it looks like it's going to be reduced, you can't just instantly stimulate increased profitability. All you can do is really reduce costs. And so the place that people are going to start seeing reductions in cost is going to be on the headcount, the number of people employed. And the government has warned us already, and it said that as many as 80,000 people could have their jobs at risk because of this. 80,000, that's a significant number. And it's particularly going to be concentrated in the large multinationals that trade mostly with the US. Now, you might be thinking to yourself, well, look, I feel sorry for the guys that are in the big multinationals, but I don't sell anything, or I don't work for a company that sells anything to the US, so I'm going to be okay, aren't I? And well, no, it's not as simple as that. You see, there is what we know as the trickle-down effect. And those big multinational companies, they are supplied by local companies. And so everything from food, from furniture, from the guys that come in and do the cleaning, and everything that there is, services, supplies, everything like that, those big companies, in order to reduce costs, are going to start cutting back on those costs. And so things that they buy from suppliers, services that they buy, all that kind of stuff is probably going to be reduced. And therefore, this will impact everyone in some way. And if you are working in the construction side of things, if you're a contractor or a subcontractor or whatever, the issue is also going to be that those projects that these big companies take on, which can be huge projects. I've seen the kind of money that they spend in the big, the Facebooks and the LinkedIns of this world. They will spend tens of millions on a fit out. All those projects are going to be on hold now whilst this uncertainty lasts. Now, on top of all of that, there's going to be retaliatory tariffs. So the China already announced that it is going to put 35% tariffs on all of American goods coming into China. And the EU are already talking about something similar. That hasn't been announced yet, but we can assume that there's going to be some sort of a similar tariff hit back. And the studies that have been done, and this is before the tariffs were announced, it was just studies on the likelihood of some kind of tariff. They said that it could shrink our economy by as much as 1.8% by 2032. Now, that was based on estimates that were based on lower tariffs. The fact that we've been hit with this higher tariff, that number could be bigger. Now, when you say 1.8%, you say, well, come on, that's not really that big. It means that we're still earning 98.2%. But actually, the number, 1.8 might not sound much, but when you take it in the total, that's actually represents 9 billion euro. So that's a big, big fall for our economy. So that's the bad news. Is there any positives that we can talk about? Well, if you look at from the point of view of diversification opportunities, that would be something that could be positive about this. So clearly for the last, for decades now, America has been the go-to place for us to look for expansion of our markets and stuff, either the UK or the US. And with Brexit, it made the UK a little bit less attractive. Now with this, it's going to make the US far less attractive. And so it's possible that businesses and companies and entrepreneurs and stuff are going to start expanding and exploring alternative markets. And I think it's probably a good thing that we reduce our over-reliance on US trade, because this will foster economic resilience. And you guys know how I feel about resilience. That word is probably one of my favorite words in the dictionary, because I think we all need to be more resilient investors. Now, what about our closest trading partner, the UK? Well, let's start with the positives in that case. The positive for the UK is that they must be in the good books with Donal Trump, because he only hit them with a 10% trade barrier. And the tariff now is, it's half of the EU's tariff. So let's all move to Belfast and start trading out of Belfast. Jokes aside, with all of the uncertainty and the volatility in the US stock market, it is possible now that the UK market might actually look less volatile and actually start to look a little bit more attractive. And certainly if you think about it, like the FTSE index and things like that, that is a pretty significant market in terms of world stock markets. So I guess there's a possibility that it will benefit from that. And what will possibly happen, and this is up more on the real estate side or the property market side, is that whenever there's tariffs like these announced, and when everyone is predicting that there's going to be a big global slowdown and a local slowdown in the economy, what happens is that you get to the point where the Bank of England in this case, and possibly the ECB, but focusing on the UK market, the Bank of England are most likely going to reduce interest rates to try to stimulate the economy so that they don't feel as much of the effect of these tariffs. And for sure, reducing the interest rates is going to boost the UK housing market. But then we do have quite a few negatives to talk about here as well. So the UK is a much bigger exporter than the Irish market, and a lot of the exports would be cars, steel, aluminium, and they would have done sent a lot of that over to the US. So now it is 10% more expensive, and so the chances of US produced equivalents perhaps would be cheaper. So we'll see. And while I said the UK stock market could look attractive compared to the US, we have to recognize the fact that it has experienced steep declines in the last 3 or 4 months as investor confidence is pretty low. And so all of this makes you kind of wonder. Generally speaking, I would say it's not great. The only thing that the UK have going for it is that it didn't get hit as hard as the EU did. The interest rate cuts that I mentioned, whilst those will be good for the housing market, it could also fuel inflationary pressure in the UK. And so that's another thing that we have to watch. And the UK is already got those inflationary pressures because of the fact that it went for the Brexit decision, and then a lot of the products that are bringing in are already tariffed because of the EU. So all of this uncertainty is certainly not going to help anybody, certainly not an investor. And one thing is absolutely for sure, this is definitely not good for the commercial property market, which is wonderful news for me because, I run an office park. And so, there's that. The potential job losses are going to make people pause, I think. You're going to have a lot of people, a lot of households will say that were thinking about moving house, perhaps upgrading their living, their home. And I think if there's any chance that you could potentially lose your job in the next few months or in the next year or so, that's going to make people pause and think about this some more, I would imagine. So I think there's probably going to be a slowdown in the housing market. Already we obviously here in the Irish market, we have a massive amount of supply-demand imbalance. So maybe it's just going to make it just a tad easier. But I think there is definitely going to be fewer people looking to spend and take out mortgages and things like that if there's a risk to their jobs. And you'd also wonder, will the banks be tightening their belts because that's a risk too? Now, I guess the trade tensions are going to force the European Central Bank to consider lowering interest rates as well. And so in order to stimulate growth, and you've got Germany and France, all of these economies haven't been doing great. Germany's economy has been doing pretty poorly. And so I think there's a good chance that the EU are going to drop at least 1% this year with the interest rates. So it's going to be interesting, and that's definitely going to be good news for homeowners and investors that own property, because their interest rates that they're paying and stuff like that are probably going to come down. So that's at least some good news. Another thing to consider is if businesses were over-reliant on the US market, then they will probably start looking at diversifying into other markets. And so what we may see, and this is just me speculating, but what we may see is some segments of the property market becoming a little bit interesting. So for example, as new trade routes open up, if people start trading with new partners and stuff, it is possible that warehouses and logistics centers and stuff like that will become an opportunity. But I think the main takeaway from all of this, news is that uncertainty is never a good thing when it comes to investment. And a lot of people are going to adopt a wait and see approach rather than making any kind of commitment. Because, if you were to take, I think I spoke about Ray Dalio a while back, a couple of episodes back. Ray Dalio, the billionaire now who runs, what's the name? He has a huge, big Bridgewater Capital, I think is the name of his hedge fund. And Ray Dalio, when he started that, he was flying along, doing great from 1975 until 1981, where he made a decision on the market and he went all in on that decision. He thought that it was going to go one way, it went the complete opposite, and he lost everything. He had to fire everybody, and he effectively went bankrupt. Now, those people that read stories like that will be sort of saying, am I going to go and make a decision that these tariffs are here to stay and I'm going to jump into investing on that basis? Or am I going to like look at the form of Donald Trump and the fact that he often announces something in the morning and then that afternoon he pulls it back? So it's very volatile, and he is a volatile person. All you need is he'll announce some sort of a tariff or something like that, and then somebody will call him up and tell him he's a genius and an intelligent man, and he will like reduce the tariffs for that person. So it's going to be one of these things where a lot of people will just scratch their heads and think, I can't predict what the future holds, and so I'm not going to do anything until a little bit more clarity and stability is there. So you got to think about that, and you got to say to yourself, the wait and see approach, what does that mean? Well, it basically means that nothing is going to happen now. It means that we're kind of going to find, I think, a slowdown in activity and economic activity. And I guess what some of the more serious guys that have like major investments to do will just say, you know what, let's just sit back and wait out the Trump administration. The Trump administration will run from 2024 to 2028. And then there'll be a new administration. Who's going to be running that administration? We don't know. Is it going to be Donald Trump for a third term? He's threatening that. Is it going to be J.D. Vance? That remains to be seen. Could it be some sort of a Democratic Party candidate that comes in the next couple of years and becomes very popular? Certainly, if everyone is being affected by the economy so badly, as is the case, I think then Donald Trump will be very unpopular and he could get voted out. Of course, he got voted out before and he claimed that he hadn't been. Now, for those of you who are saying, well, hold on, Gavin, let's go back to Ireland and let's go and have a look at the multinationals. We have lots and lots of big multinationals. We've got Microsoft, we've got Oracle, we've got Google, we've got Facebook, we've got all of these guys have got mega companies here in, they have like huge facilities, huge headquarters. We have, I think, 9 of the 10 largest pharmaceutical companies have their headquarters here in Ireland as well. We have huge aircraft leasing companies here. Like there's just so many huge multinationals here. What are the chances of them deciding, you know what, we got to go back to America. This is just the way it is now. And so let's close up all those big factories. IBM, for example. I worked on the opening of IBM's factory back in 1995, 94, 95, I think it was. It's when I just started in architecture. And I remember that, like, we built those couple of factories out in Mulhuddard. And the reality is they're still there today. They're still trading. It's become a huge campus. Will they just shut it down and then relocate to America? That is the worry that a lot of people have. And I think realistically, if you're going to think like that, well, then you have to look at what is the decision-making process that these large companies will go through before they make such a decision. Like if somebody decides we're going to close down in Ireland or we're going to move somewhere else, what will they be? What are the kind of headings they'll look at? The headings would be economic, they would be political, and they would be operational. First things first, the cost, the economic side, like the cost of relocating production facilities involves massive capital expenditure. You only have to look at Intel, which is in the Leixlip area here in Dublin. Like there is billions and billions invested in that facility. And like the chances of them uprooting and going back to America and leaving behind literally tens of billions of investment, they're not going to do that on a whim. It's going to take quite a few years of assessment and stuff like that. So they're only going to do that if they have a view that these tariffs are absolutely permanent and here to stay and there's no choice. And then when you look at that as being a possibility, then you have to turn your head to the other heading, which is political. Is the political situation stable in America? Are Trump's policies widely supported? And I would say, no, they're not supported. I would say that they are highly unlikely to have the support of the other parties, the opposition in the US government. And if you think about it from the point of view of like another administration will come along, that administration, when it comes along, will be probably rowing all of this back, and they will go back to a situation where you reintroduce free trade. And so a lot of these big companies will be saying, are we going to go and uproot our factories and do all of this kind of stuff, only to find that the next administration that is in power rows it all back and goes back to free trade? You have to kind of wonder. So we'll have to go and see about that. But the first thing is just the total instability of the situation. The fact that Trump himself is just such a volatile person that he could change his mind, he could reverse it. If he sees that this is all unpopular and that he's losing support politically, he could turn around and blame one of his economic advisors and say, this guy is fired, he's the one who suggested all this, and it's a stupid idea, and let's row it all back. And if you look at just the division in America, the polarization of the US, you've got so many people that are Republican, so many people that are Democrat. You've got the way they think of each other. You see it. It's just so polarized in the US right now that it's very, very hard to see this as being a long-term policy, because it may be reversed in the next administration. So if there was widespread support across the different parties, you might say, oh, okay, this is actually something that is probably going to be permanent. But they can't agree on anything. So highly unlikely that this is going to be viewed as permanent, at least in the short term. So the next thing we have to look at is operational complexity. And this is a huge thing, right? Supply chains that they can take years to put in place. You're not talking about something that is just introduced overnight, because we're not just talking about factories. We're talking about the suppliers who send the stuff to the factories. A lot of the time, those places also have to require huge investment and stuff. And then you have to look at, is there a skilled workforce in the new location and all that? So all of this stuff comes into consideration. Think about the iPhone. Most people who own an iPhone, you open up the nice packaging, it says designed in California, but those are built in China a lot of the time. And they're built in these huge factories called, one of the companies is called Foxconn. Foxconn employs like tens of thousands of workers, and they all work in these factories, and they all assemble the different, the components, and they put them all together with machines and stuff. Like, that isn't a huge investment involved in that. And Apple are not going to just say, okay, we'll work with somebody else, because all of those guys, like the tens of thousands of workers that are there, to uproot all of them and move them to another market, that's going to take years and years, and it's going to take huge recruitment drives. And the thing is there's already pretty full employment in the US. So where are they going to get all the workers from if it was to be relocated back to the US? So relocating these factories back to the US is just a massive undertaking. I don't think there's enough skilled workers. They're already driving out all of the migrants, and that is reducing the amount of unskilled labor that there is in the US market. So much so that I read recently that in Florida, they're actually trying to reduce the age limit on young people starting work. And that is because there are so few migrants around now that are willing to do the crappy jobs, that they want teenagers to do them. And so they don't want the guy from Mexico or, from Cuba or whatever, who's come across illegally perhaps and who gets paid cash in the hand. They now want to get the teenagers that are American to take those jobs instead. So that's because there's not enough unskilled workers. Can you imagine if you're doing some sort of a pharmaceutical company and you're talking to guys that are highly skilled, that have been highly trained in all of this? Where are they going to get those guys from? Where are the raw materials going to come from? Are they just going to arrive like the factories that are, if you go down to the south of Ireland, to Cork, there's all of the big ships can come into Cork, and they come in, and then there's roads, there's a road network to going to be able to get the products off the ships and straight to the factories. is that going to be possible if you're shipping things to America and they're putting factories right in the center of America? So now the trucks have to travel for hundreds of kilometers or miles. All of this has to come under consideration. And so also you got to think about the labor cost. Salaries in China, salaries in Ireland, salaries in Europe, salaries in America, they're all very different. And you might be saying, well, it'll be cheaper to kind of do it now that there's tariffs. It doesn't mean that it'll be cheaper, because you'll have to employ people in the US to do it. And if there's already pretty full employment, then where are those guys? The salaries will just be pushed up. So I think the time frame involved for making a final decision and then for it actually to be put into place. So let's say that there was political stability today and somebody was saying, yes, I'm confident Donald Trump will not change his policy. I'm confident that this tariff is here to stay. If that was the assumption and you started today with the decision, first thing you do is you hire a big firm to go and carry out a feasibility study and tell you where in the US should you relocate? Where would you have all of the skilled labor that you need? Where would you have the logistical support, the infrastructure, the power supply, whatever it's required? That's going to take 6 to 12 months, that feasibility study. Then once you've figured out where to go, it becomes a board level decision. And so papers are created, reports are created, all of this stuff, and it's sent to the board for decision. And a lot of the time, the board, because they're talking about billions of expenditure here, they are not going to just simply say, oh yeah, let's do that. They're going to want to be really rigorous in their assessment. So that's going to take 3 to 6 months. Site selection. Once you've said, yes, this is the location or where we could move, then you get into, okay, let's see if we can find a piece of land to go and build all of this stuff out. The site selection process, it's not just finding a piece of land, it's also making sure that sufficient workers live in that area, sufficient power exists, water, whatever it is, the road system. That's another 6 to 18 months of a selection process. Then construction and fit out, if there is a fit out, that's 12 to 24 months. And then you're into commissioning and testing. And commissioning and testing, usually 3 to 6 months. And then you don't just simply show up in the factory and click a green button and everything starts producing at 100%. There is a kind of a ramp up to full production. So you start at probably 5%, then you go to 10, then to 20. And it will take 6 to 12 months to get that factory up to full production capacity that it would already be having in, say, the Irish market or whatever. So you're talking 3 to 5 years minimum for that whole process to play out. Now, if you consider that we're already like 3 months into Donald Trump's, being president. So we're looking at 3 years and 9 months left in his presidency. Maybe he'll get elected again. That is definitely not a given. And so you're talking about a 3 to 5 year decision being made with only 3 and a bit years until the man who forced you to make this decision is actually out of power. So you can see what I mean here just in terms of all of this. It is highly unlikely that these guys are going to rush this decision. And so my personal view on all of this is that we're going to see all of these big companies adopt a wait and see approach. There's just too much uncertainty. There is too much volatility to start moving production facilities to another continent, let alone another county. And so I think I still think there's a chance that these tariffs could be reversed if Donald Trump sees just how politically damaging this is for his popularity and stuff. And he'll just throw somebody into the firing line. Somebody will get thrown onto the bus from his administration. This is the guy that told us that tariffs would work. Clearly they're not. Let's change it all. And so I think we're just going to have to wait and see. And I think most people will sit back and say, yep, not going to put my hand in my pocket until I have some clarity of what's happening. So I guess we're all going to have to batten down our hatches and buckle up because it's going to be a bumpy ride. And I think you all have to be very careful as investors, as home purchasers and owners. I think you just need to take a careful approach. Don't panic. As I've talked for the last 5 years on this podcast about, you have to be kind of decisive, but in a rational and a logical way. Don't get emotional. Don't use fear, and don't use greed as any kind of a motivator. And panic and overreaction will often make you, do something stupid. And it also, on the other side, it leads to great investment opportunities for the person who is sitting back and quietly watching the market and looking for these kind of rash decisions so they can jump in. And if you have the right skills and mindset, then you can actually achieve that. And this is the stuff that I coach and mentor about in my accelerator. So if you would like to equip yourself with those skills and the ability to sort of see these opportunities when they come along, as bumpy a ride as it might be, it could also throw up some interesting opportunities. So if you'd like to consider joining my program, you will find a link in the show notes below. Guys, this is episode 250. The fact that we've done 250 episodes, I want to make some sort of a bonus for you guys. So those of you who sign up to the program in the next, say, between now and June, the first week of June is going to be our event that we do. We do the Investor Summit every 4 months. And in that Investor Summit meeting, you get to meet all of the people that are in the program. And we'll be kicking off kind of a new cohort in June. So between now and the beginning of June, so it's about 6 weeks, I guess, from now, we are going to have anybody who joins the program is going to get it at the old price. And I'll talk you through all of that when you reach out to me. And so, guys, I hope you found this one useful. Keep an eye out. We're coming up on season 6. Season 6 is going to be starting very, very soon. And when it does, I'm going to be introducing a couple of changes. And you will, I think you're going to find those changes interesting. And finally, just to mention that the YouTube channel, the Behind the Facade YouTube channel, and there'll be links below. If you're listening on the podcast, you'll find a link to the YouTube channel below. But I have been playing catch up with all of the video episodes that we've created for the past 12 months. And so you can go in there, and at the moment I'm releasing 2 podcast episodes, video episodes a day from now until the end of the month. And so hope you'll find those interesting, and I look forward to catching you in the next one. Take care.